Okay, good afternoon, everybody. Good afternoon, everybody. It's Paul here. Here we are on Monday, the 27th of August, 2018. It's a bank holiday in the UK, so I do appreciate those of you who have given up your time and your bank holiday to join me for our what is our fifth session now in Mastering the 4 M's of Trading webinar series here for Admiral Markets. As always, before we dig into the main core of the presentation, we'll just run through a quick risk disclosure. Forex and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 83% of retail investor accounts lose money when trading CFDs with this provider. You should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. Please ensure you fully understand all the risks involved. Forex and CFD trading is a risky activity, and this presentation and accompanying video should not be taken as advice for investing, as they only represent the personal opinion of the author. The presentation and accompanying video is for information and educational purposes only. As of August 2018, the regulation within the European Union differs for retail clients and professional clients. In our presentation, we use demo trading accounts where all clients can still use a high leverage in a risk-free environment. Before opening a live trading account, please consider the differences between retail and professional trading terms. Retail clients benefit from unlimited negative balance protection. Professional clients at Admiral Markets UK receive a compensation of account deficits with the maximum payout of £50,000 sterling as per our negative balance protection policy. Why use Admiral Markets UK? Well, Admiral Markets provide a wide range of instruments and products for traders to get engaged with financial markets. In particular, the DAX is their most popular offering, where they provide a very, very aggressive and competitive typical spread of 0.8 points during the main trading hours. And they also provide a supreme edition of the MetaTrader 4 and MetaTrader 5 platforms, and if you have any particular questions about that, then by all means get in touch with your account representative, and they'll be very happy to help you with setting that up and making sure that you're able to utilize the wonderful platforms. So those of you who don't know me, my name is Paul Wallace. My background is actually I transitioned out of the Air Force into trading during the dot-com boom of the late 90s, trading equities, and then after that I transitioned across to trading primarily FX indices and commodities for funds and for myself. I also run a support practice for traders, where I've helped traders from complete beginners through to experienced traders running $200 million books at banks and funds, and with that's given me a great lifestyle and a great opportunity to be able to talk about trading and to provide some insight, and that is what we're going to do during these particular sessions. For those of you who are really interested in my particular trading style, the majority of my trading is as a discretionary-based method trader. Those of you who are new may not fully understand that. Those of you who are experienced, will probably understand what that means. But I guarantee to all you new people, by the end of these sessions, you'll understand what that means by my definition. Primarily, I'm a swing trader, so that means my trades are open for a few hours to a few days, occasionally a few weeks. I'm very, very big on keeping things as simple as possible, because I know that in the choice between being either a greed-based trader or a fear-based trader, I know that I'm a fear-based trader, and that simplicity is key with that. I basically meld fundamentals, technical sentiment, and geopolitics together to give me my decision-making framework, and I primarily focus on FX indices and commodities. I tend to invest in equities. I do a little bit of crypto as well, but the vast majority of my work is FX indices and commodities. My overall trading philosophy, specifically in FX markets, is that I'm looking to buy strength and sell weakness on a swing basis, and wherever possible, I like to use pullbacks for entries. Tend to look at them. I like using the weekly chart, as you're going to learn, but I will also quite happily manage and execute on the daily and 4-hourly charts, just using very simple price action techniques for trading. And we will go through all of those as we go through these sessions week by week. So when it comes to my own trading, so what I said is primarily I'm a swing trader, okay? And when I'm trading swings, I want to be buying strength, selling weakness, or I'm primarily a trend trader, okay? That's I will trade some reversals, but the vast majority is I'm actually just looking to find where the trend is, okay, where the strength is, and try and ride that. Whereas on my intraday trading, it's almost the exact opposite. I am primarily a mean reversion trader. I like to see price overextend on an intraday basis. And then, I believe, with the right kind of price action, that there might be the opportunity for me to take a trade as price reverses back to its mean. So, it's there are different ways of trading the markets, and they are what I have learned works for me over many years. And part of this kind of mastering the 4Ms of trading is about understanding who you are as a trader, and understanding what works for you and what is actually your best way of operating, because you will all find, all of us, we all have our own particular strengths, we all have our own particular weaknesses, we all have our own particular niches, and the quicker you're able to understand that, the quicker you'll be able to operate in a way that is most powerfully effective for you as a trader. So I always like to talk about expectations of the session. My job here is to educate about the 4Ms of trading. I want you to be able to go away and analyze any market, right, and be ready to trade it. I'm very big on creating what I call versatile traders, and how I define a versatile trader is that you should be able to trade any instrument in any direction on any time frame. That's what I want. I want you to have the skills to do that. As I just said on the slide before, what you will find is that you will find that certain areas, instruments, time frames, outlooks, will become your niche. But as a general skill base, your ability to trade any instrument in any time frame on any direction should be, let's say, kind of like your core skills as a trader. And along with that, I'm hoping that as we go through definitely the later sessions about managing self, and we'll also be talking about managing risk, about helping you raise awareness about how you go around operating yourself, because the higher your levels of self-awareness as a trader are, the better placed you are to make different choices, and with better choices we tend to get better results. For my expectations for you, I appreciate that we have a wide range of experience in the room, and that I have a time limitation of 40-45 minutes. So I ask just your your favor there, that I'm not always able to go into the all of the topics in the sort of the breadth and the depth that I maybe normally go through. I appreciate some people might have more questions. That's okay. Get in touch with your account representative at Admiral Markets. They'll be very happy to help you. So what I'm always going to be doing is trying to focus on tools that you can use tomorrow. Okay, we could talk about the academics till we're blue in the face, but ultimately I want you to be able to have concepts, ideas, suggestions, checklists, etc., that you could use tomorrow. Okay, that you can take away something from this, and from the way you look at the markets tomorrow, you'll just do maybe one more thing a little bit differently. Okay, you'll have just evolved and developed as a trader. That's what I hope I can get across to you, and that's what I want to try and build that kind of theme throughout these particular sessions. So here we go, mastering the 4Ms of trading. I appreciate those of you who have joined me week on week, and I appreciate some of you people have been watching maybe these sessions on demand. Okay, I appreciate all of the feedback, and but what I talk about is when I'm talking about mastering the 4Ms of trading. All right, by now, those of you who have been joining us will realize I'm talking about mastering markets, method, money, and myself. Whenever I speak to any kind of trader, right, doesn't matter whether they are, a trader who's, been trading for 2 weeks, or whether a trader who's been trading for 2 decades, I'm actually looking at them through this prism. Okay, I'm looking at through this filter of, how are they able to manage and master markets, method, money, and myself? Because what I've said time after time after time is that there's a real sweet spot. Okay, there's a real sweet spot, namely where somebody is in really mastering those 4Ms of trading. That's when they tend to be in a position to deliver good performance. All right, and if you, on the flip side, if you yourself, you're having little struggles or a couple of challenges with your trading, well then, I just challenge you just to, just to check in, with how are you doing. Take an almost like a little bit of a business inventory of your trading business. How are you, in terms of your inventory of knowledge, or where your weaknesses and skills and deficiencies may lie in terms of markets, method, money, and myself. Because I assure you, if you're having a challenge with your trading, and everybody does at different stages of their trading career, okay, everybody does, myself included. Nobody's perfect. Nobody escapes it. You are going to have you will have challenges, okay. Anything in life that is worth doing, you will have challenges, and as a trader, we learn, we adapt, and we overcome that, okay. And part of that is, as I said, is about being able to sort of look at where we are in terms of those 4Ms of trading. So, what we're going to do is, as I said, through these sessions, the early sessions we're going to be focusing more on markets and method. And then as we become more, advanced, developed, you get to understand the concepts, then we'll be focusing a lot more on money management, on managing myself. And I'll give you, the circle is always never ending. So, there will be more advanced ideas around markets and method as we go. So, there's always something new to learn. As I said, always some new tools and ideas and concepts for you to take away to be able to use straight out the gate tomorrow. So, if you remember from the sessions we talked about, okay, when I talked about understanding markets, and I went through that in a good deal more depth in session 1, and they're available in the webinar archive and on the YouTube channel for Admiral Markets. Went into the various 4Ms in much more detail, okay, and occasionally I will touch upon them again as we go on this journey. But what I talked about was you need to understand the markets that you're operating in, okay. Is the crypto market the right market for you, or is the sort of the indices or the commodities, or maybe it's fixed income bonds, or maybe it's FX markets. Perhaps you can operate in all of them. There's some people are very, very good having a sort of let's call it like a breadth approach in terms of what they trade. Other people I learn are very good at having a sort of a depth approach. Okay, they only have like 1 or 2 instruments, but they go into that in great depth. Okay, so part of it is it's about learning and understanding yourself, but it doesn't really matter in terms of how you trade, in the sense of you need to understand those. You need to understand those markets. Okay, you need to understand the market that it is, and in its most simplest terms. Okay, when I speak to a trader, I need to know that trader is able to understand the major elements of that particular market that they are trading. And I need to know that they have the skill set and the consistency to be able to identify whether, what environment that market is in. Okay, is it trending, or is it range bound? There are phases of that, and as we come back in, let's say in the future to that, looking at more advanced elements, okay, then we will touch upon that, about recognizing when markets are either running out of steam in the existing trend, or whether they're getting ready to turn and reverse. But for today, we're starting off, I just need you to know that you can actually, basically identify if there's a trend or not. And what we talked about is that, it's consistency, okay? People talk about wanting a consistent, they want consistent results, all right? People want consistent results, but then they struggle to understand why, if you have an inconsistent approach, well, then you can't really be too surprised when you get inconsistent results. Okay, there's consistency and discipline go hand in hand together. If you tend to be consistent, that means you're being disciplined. If you're being disciplined, that tends to mean you're being consistent. And so part of it is to help you is to just get yourself into almost like a routine trading habits, trading checklist of, whenever you look at any chart, doesn't matter if it's, if you focus on 5-minute euro, or you're focusing 4-hour Bitcoin, or you're doing dailies on the FTSE, all right, you should have like a little routine, little habit that you do every single time, okay? And here's what we started to put together, okay, over these sessions. Step 1, define your levels of support and resistance. Step 2, define if there's a trend. Step 3, wait for price to react at key support and resistance levels. Step 4, look for price action signals at support and resistance levels. And step 5, have a look at whether that's part of a bigger chart pattern. And that's what we're going to do in a few of the future webinars, looking at that sort of step 4 and step 5. But today, what I want to focus on is just quickly go over the one or two pieces that we went over the last couple of weeks, and then I want us to actually get to the charts and start showing how we do this just time and time and time again, and start to build our watch list of what we're going to be looking at. So remember, step one we talked about is, whenever you open a chart, even if you're a 5-minute euro dollar trader, all right, or whatever, your short-term intraday trader, suggest is look at the monthly, the weekly, and the daily charts and draw in significant, horizontal levels of support and resistance. You could also use, psychological round numbers where you start to see them becoming relevant. Okay, so I'd say humans are lazy. Okay, so we're looking at pound against dollar, right? Pound against dollar 130 has been a significant number recently, both on the upside of it and the downside of it. Okay, and we'll keep an eye on that. US dollar index 95 has been the number of recent. Okay, with euro against US dollar, we were at 125, and then we were down to 115 and beneath. Okay, so being aware of those big round psychological numbers. Okay, gold $1,200. All right, you want to be aware of it because humans will look at that. Okay, humans will look at that. So we want to be aware of those, because where those particular levels of support and resistance, all right, that is where we're sort of interested to see how the market reacts at those particular zones. And down the line, okay, when we're doing, let's say, more advanced ideas around support resistance, we'll talk about strike zones and order blocks. Okay, we will come into that. But for the moment, I just want you to be able to show me that you can define support and resistance on all your charts, however they go. With that, once we're sort of defining levels of support and resistance, well then, I want to define the trend. Okay, can identify whether the instrument is trending or consolidating. Okay, as I said, there are phases to that, and we will touch upon that in the future. But I need to know that you can actually show me that a chart is is either trending or consolidating. Because if you're unable to do that, well then I worry about whatever else you're doing. Okay, so here's a DAX weekly chart. Okay, you can see on the left, you can see a period where that market was range bound, and hopefully you can see the rest of that market where it's it's been trending nicely. And what I say every week, okay, and I say it because I want it to seep into your bones. Okay, ladies and gentlemen, is that if you're looking at a chart, and if you can't decide if a market is trending or not, then I'll give you some advice. It probably isn't. Okay, good trends leap off the page at you. Okay, the great Ed Seekota, okay, who was an immensely good trend trader. He's featured in the books, Market Wizards, New Market Wizards. He literally would print off, in the old days, he would literally print off his charts, stick them on the wall, okay, of his trading office, and then go and stand on the other wall, okay, on the other side of his room, and look at his charts. And he would do nothing until he could see that, the chart leapt off the page at him. And only then did he go and actually get involved in that particular instrument he was trading. And it's still pretty much the same. Of course, now we have this fantastic tools, okay, fantastic charting tools, MT4 and MT5 here, the Supreme Edition offered by Admiral Markets. So the ability to basically to look over hundreds of charts effectively, okay, across all sorts of time frames is there and available to us. But it's still a case of a good trend will leap off the charts at you, okay, and if you don't know if it's trending or not, it probably isn't. Okay, that might sound like being a bit simplistic, but if you remember what I said back on one of my first few slides about how I operate, is simplicity is key. Human beings, and me in particular, okay, we have a tendency to overcomplicate things. We try and make things more difficult, more complex than they need to be. We just need to have something simple, robust, and consistent that we can do time and time again. And I know in these kind of it might sound like I'm laboring it in these first sort of, let's say, 6 to 8 weeks of the sessions. It's just because I want it to just basically be firmly embedded in the way you engage with the markets and the way you look at things. If you remember last week, we talked very briefly about moving averages. Just talked about them being a popular trading tool because they're visual, because it allows traders to smooth data. But realistically, what we're talking about is, trying to get across is that just giving them as an idea of gauging the direction of the current trend and maybe its strength and momentum. That we talked about, they have pros and cons. Okay, we talked about, as I said, they're very good at identifying things like dynamic support and resistance, and giving confirmation that a trend is probably, you know, at an end, or that it's building up steam to get ready to explode. But then also, you know, using simple trading ideas like moving average crossovers as a general rule. You know, what you create and win in trading environments, you tend to give back in, you know, choppy environments where you get choppy range bound environments where you just get, you know, a little bit of whipsaw back and forth. So, you know, we just we have them, we use them, they're very simple, okay, but also, you know, we understand what the pros and cons are. If you remember what I said, you know, on my charts, that you know, all I show is that I have a blue 20 period simple moving average, a red 50 simple moving average, a green 200 simple moving average. I also have fractals on there, and that's really about it. Okay, that, and along with drawing in levels of support and resistance, and, you know, drawing in things like strike zones and particular areas of supply and demand that are of interest to me. The rest of it, as I just try and keep my charts quite simple, quite clear. Okay, simplicity is key. I very often get sent charts from traders who are struggling. Okay, and they send me a chart and say, you know, Paul, I'm struggling. I can't seem to find a trader. You know, I'm just confused. I don't know what's going on. And then I have a look at the chart they're using, and the chart's got like 10 moving averages, and it's got about 8 different oscillator indicators. It'll have RSI there, it'll have CCI, it'll have stochastic, it'll have MACD, it'll have, you know, momentum on there, it'll have Williams oscillator on there, they'll have Bollinger Bands on there, okay, they'll have PSAR on there. There's literally about 20 to 25 indicators on a chart, and, you know, it's no wonder that they can't actually see what the price is doing. Okay, there's just too much on the charts. All right. As a general rule, a bit of a general rule of thumb, human beings can usually handle somewhere between about 5 to 9 bits of data. All right. So call it rule of thumb at 7. All right. We'll handle around about 7 bits of data at a time. Anything more than that, well, then, you know, we just get overwhelmed. All right. Unless you've been trained to operate, you know, in high intensity environments. Okay. Most people would struggle. So, you know, when if you've got 25 indicators overlaid on your price charts, okay, then you're not doing yourself any favors. Okay. I know why people do it. They do it because they treat it as a security blanket. Okay. They think that the more indicators they have on a chart, that actually, you know, the more secure they'll be when they make a trade decision. Sadly, I'm here to tell you, ladies and gentlemen, it doesn't work like that. Okay, I'm afraid to say. So you just keep it simple. All right, you want to be able to just make a decision. All right, remember what I keep talking about. I just want to make one of 3 decisions. Am I going to be a buyer? Am I going to be a seller? Or am I going to do nothing? Simple as that. Let's keep it nice and simple. So, you know, that's what we said. Define level support resistance, define a trend, and then start to look and get interested in particular key levels, all right, key levels, how price reacts at those levels. And that's what we're going to do over the next, let's say, sort of kind of the September sessions is, okay, once we've got this in place, well, what are we actually going to do, Paul? What's we going to actually do? Well, you know, once we're at those particular levels and we see price at that particular areas, I'm looking for what we call a confluence of events to happen at those key levels. This is where we start to look at specific price action setups. As I said, that's going to be our September. Okay, that's going to be our September for us, about, you know, looking at that and building that up. Okay, and seeing where how those price action setups are created. You know, and what I've also been saying, you know, that simplicity is key. Okay, when markets are bullish, you want to be a buyer. When markets are bearish, you want to be a seller. Define the trend and trade with it. No trend, no trade. No signal, no trade. All right. Now, I appreciate that some people joining us might be very, very short-term scalpers, you know, but then also a lot of people will be, you know, sort of longer term, you know, hourly for swings, and maybe even sort of end of day trading if you're trying to do it around, you know, a permanent day job. And I also say, you know, once again, it might sound me being a bit simplistic, saying, you know, when markets are bullish, you want to be a buyer. When markets are bearish, you want to be a seller. And yeah, I appreciate that can sometimes sound a little bit simplistic, and I make no apology for it whatsoever, because what I see lots of people, you know, identifying a bullish market, and then, you know, they try and do the opposite. Okay, and that's all driven by ego. That's all driven by they've missed the big trend that is starting, is running, and their ego gets hold of them and says, right, you missed that, you missed that big trend. Here's what we're going to do. We're going to do the opposite. We're going to sell into that bullish trend. We're going to sell into it. Okay, we're going to pick the top. We're going to pick the top. And what happens is that rarely ends very well. All right, so print that. Take a screenshot of this, put it up on your wall. When markets are bullish, be a buyer. When markets are bearish, be a seller. Define that trend and trade with it. And if there's no trend, no trade for you, no signal, no trade. Keep it simple. Keep yourself on the right side of the tracks. Okay, that's what we're looking to do here. And we'll do more of that when we focus a lot on the risk management and money management sides. So there we go. Those are kind of the 4 steps that I want us to look at. Okay, and just to build up that consistent routine. All right, whatever we're looking at. Okay. And what as I said, it's all about us having a decision-making framework. Am I going to be a buyer? Am I going to be a seller? Or am I going to sit my hands? That's it. There is no perfection. All right. All I want is just a simple, robust, objective, consistent way to make one of those 3 decisions every time I look at a chart. And then as we go through and understand trade management, okay, that will start to give us an indication of how we operate and improve. So Melchor has asked if Melchor has asked about if we can download a copy of this lesson. And what you'll find, Melchor, is that after these sessions, they are recorded and then they go on to the webinar archive at Admiral Markets, and also on their YouTube channel, and also I believe on their Facebook page as well. So by all means, just have a look at that. As I said, all of the sessions there. What I'm doing is week by week by week, just getting just adding a little bit more every time, a little bit more. As I said, it's just slowly but surely building up your knowledge base, your understanding, your exposure to concepts, and it's just as I said, just week by week, just getting a little bit better, a little bit better. You're very welcome. Enjoy, Melchor. I hope I pronounced your name there correctly. I apologize if I haven't. So there we go. It's so I said, yeah, we're looking to make just a decision-making framework. Okay, that's what we're looking for. Let's keep it simple. Don't overcomplicate it. Okay, don't overcomplicate it. Right, trading is challenging as it is. You don't need to make it any tougher for yourself than it needs to be. All right, keep it nice and simple, and then we can work with that. So yeah, we're going to talk about our profiles. I'm going to talk about actually in particular the charts. We'll have a little bit of look at what's going on here, okay? And then if there are any questions, we'll take them. So here's what we're going to talk about for when we get across to the charts, is about setting up our we're going to call it our mastering the 4Ms profile, which we'll touch upon. So here's FX, okay? Here's what we're going to look at in FX over the next few weeks and months. So dollar index chart, and then 28 of the majors, and that's basically the sort of the major currency pairs of the world. So of course dollar, sterling, euro, Swiss franc, US dollar, Aussie dollar, Kiwi dollar, and Canadian dollar and Japanese yen. So the cross pairs between them, that gives us 28 major pairs. So there's lots of there to look at there in the FX pairs. I appreciate that some people might trade some of the more let's call them exotic pairs. That's absolutely fine. As I said, what I'm going to be covering in these sessions is is instrument and time frame agnostic. Okay, well what we talk about here will work as well on a monthly chart. Excuse me. A monthly chart on the sort of the German Bunds as it will on the 1 minute chart of the Aussie dollar. Okay, it's about being a versatile trader, being able to trade any instrument in any time frame and in any direction. That's what I want you to have, at least to have the skill set to be able to do. When it comes to other things that we're going to look at, we'll have a look. Excuse me, just a little bit of a cough there from all this talking. We'll also be looking at, in terms of the indices, we'll have a look at the major American ones: S&P, Dow Jones, Nasdaq. Europe, we'll have a look at FTSE and DAX. And, we've also got the CAC and 1 or 2 others we can bring in. We also have the Nikkei, and also we will have access to the Chinese, okay, and Hang Seng, which we'll add into that pile just to give us a little bit of let's kind of call it like global breadth. When it comes to commodities, we'll look at oil, gold, silver. and also if you have access to it, you can, as I said, you can add in some of the, we're primarily focusing on, the hards, okay, whereas opposed to, the softs, the agricultural ones, okay, if that's your particular bag, you're very welcome to join them in. Equities, well, people look at the FANGs, Facebook, Amazon, Apple, Netflix, Google, but you can also add your personal favorites. Okay, maybe you love Tesla. All right, maybe you love Tesla. Maybe you hate Tesla. Okay, I don't mind. I don't care. We're traders. It's about forming your own opinion and trading in line with that. Okay, so we can do that, and we also have. On the Admiral Markets MT4 and MT5 platform, we also have access to cryptos now. So we've got Bitcoin, we've got Ethereum, we've got Litecoin, and we've got Ripple as well. Okay, so there's across all of those, broad spectrum of instruments, there are plenty of things for us to have a look at. Okay, plenty of things for us to build up, let's say a bigger global view, and to be able to look at markets and start as we get into the more advanced ideas about how we can see the sort of intermarket correlations go on, and how we can see that, how we can utilize that in our own, for our own favor. So just to finish the slides, okay, remember, we're always looking to manage those 4 M's of trading: markets, method, money, and myself. All right, just, I tell everybody at the end of every week, okay, just check in with yourself. Okay, it could be as simple as scoring yourself 1 to 10. All right, in terms of those 4 M's, how well have I managed those this week? Okay, have I done well on my money management? Have I managed myself well? Have I been connected with the markets? Okay, have I had a good read on the markets? And have I executed my method correctly every single time? It can be just something as simple as that, but what I'll assure you is that if you're having a little bit of a challenge, there's probably one or two of those areas you're struggling in, and it's when those areas are doing well, that's when you tend to be trading at your best. So as I say, constantly monitor those 4 areas of trading. And as I say every week, right, these sessions is all about weaving those 4 M's together. And as always, if you've got any questions, whether you see this, whether you're watching this on demand later, by all means, get in touch with your Admiral Markets account representative. They'll be very happy to help guide and assist you. You can call them on the London number 02077264003. You can email them at hello@admiralmarkets.com. As I said, there is the YouTube channel where all of these sessions are posted, and also the facebook.com page where you can engage and watch and pass commentary. So those are the slides. Why don't we switch across to the charts then, okay? And let's start to have a little look at what's going on and get ourselves into start building these good habits and routines. So if you just bear with me a moment, hopefully we should just be able to switch across. Super, everybody. Okay. Excuse me, they're talking there. I have to make sure my throat's still okay to chat to you all. So I hope that you can all still hear my voice. I hope you can all sort of see my charts as well there. I was having a look at this earlier today, so just before we went on. So what I have here, as I said, I appreciate some of you will be very good at utilizing MetaTrader, whether it be 4 or 5. I also appreciate some of you will be very new. Okay, so let's try and as I said, I try and help where I can, and within the sort of the limits of our particular time sessions. Okay, so here we go. What I've done is I've set up a profile here. It's called 4 M's of trading. Hopefully you might be able to see that down at the bottom. Why don't I just move this element out of the way, get the cursor on. Hopefully maybe you can see it on there. 4 M's of trading. Okay, just set that up as a profile. Okay, you can see there on the profile. You can see I have lots of profiles there. I have a profile for every one of the major FX pairs. I've got a profile for indices. I've got profiles for commodities, etc. So I can jump between them all. So here's a good example. Okay, this, as I said, this is Tesla. Let's why don't we we've got Tesla up here, so let's have a look. It's been in the news recently. I think there was a fire there this weekend, wasn't there? If I head rightly, it's they've had some problems there with some of the commentary that Elon Musk has said. Whether you might love him, you might loathe him. Okay, that's absolutely fine. We're traders, aren't we, ladies and gentlemen? We're here to sort of make a market and to pit our wits against the rest of the market incumbents. So it seems like a really good place for us to start. I have a normal template that I use. Okay, just as I said, if you're very new, you can just right click on any chart. You can look at properties, okay, and then set up how you want your charts to particularly look. Okay, I always suggest having the period separators on, which is these dotted lines, okay, because this is a monthly chart. That those periods will be in a year. Every candle will be equivalent to a month. So you can see that I've included, I've got a blue 20 period simple moving average, a red 50 simple moving average. I've also got the, here we go, I've got the fractals on here as well. Okay, if you don't know how to find them, insert, indicators, then down to Bill Williams, and then down to fractals there. And if you go back, I think it was in session 1 or perhaps probably session 2, where I talked a little bit about how I use fractals, why I find them useful in terms of my charts, and so you can see them and put them on there if you wish. So as I said, we talked about those very, very simple habits. We talked about namely whenever I look at a chart, okay, I'm just all I'm interested in is whenever I open a chart, what I'm going to do is start drawing in significant levels of support resistance, okay, and what I can see here is that oops, here we go, I'm just going to tighten this up. The sort of recent high there we had, up here we had a recent high, okay, second high, and it might be said, we've actually a little bit of another try towards it, but clearly that kind of area, sort of, I'd be looking at, sort of 380 to 390. There's clearly definitely that's been recent resistance, but hopefully you can also see some of these fractals giving us an idea of where other significant levels might be of interest to us. So, I'm looking to just make sure that I'm drawing them in here. What I'm interested in is, when I start to see lots of fractals around a particular sort of particular level and zone, okay, that starts to get me interested for for whatever reason. 175, let's call it 175, 180, that's a significant a zone and level. So I'm kind of intrigued at that. We can see here what 293 if I get cursor back on. Right, 293 is we had it bounced off it here, and then here it was actually resistance. So and actually once it broke through it came back next month, touched it before it took off again. So as I said, it's just a case of drawing in these particular levels, okay. And the great thing about MetaTrader is that once you've done it, okay, it'll keep those particular lines. And as I said, go down from the monthly, then you go down to your weekly, and of course what you'll start to see is maybe some of the lines you drew, you might want to tighten them up. You might want to sort of adjust them a little bit, okay, based upon as you see more of the data on the particular levels and zones. But as I said, it's rare that these things turn on an absolute sixpence. It's these lines are more about giving us an indication of sort of areas and zones that we are going to be interested in our particular trading. So what I'd be looking at there, okay, then then if you still feel the need to, you could go down to the daily charts as well. All right, I'm actually, even though there's lots of fractals there on the daily, I'm kind of I'm mostly sort of happy around that, but maybe looking around that kind of 360 level. There's lots of touches in that area, lots of where price has been rejected at those areas. So I'll just be taking a look at that, okay. And so there we go, and that's there we have done very, very kind of quickly. All right, just looking at the those areas there again. I'm kind of liking this as well around, but well, not surprisingly, there we go. If I just look at that particular level I drew in, that is horizontal properties. That's just under 300. Okay, so I'm just literally, not surprisingly, there's a big round number there. Okay, clearly that zone there between about 290, 300. There's definitely a little bit of interest in there, and I suppose it's no surprise then that what we saw that last week when price came down to it, it bounced up off it. Okay, still bounced up off it $20 odd, $25, and we look at it today. So when I'm looking at that, I'm looking at, well, on a weekly chart. If I zoom out, on a weekly chart, that that has been in a nice uptrend. Not necessarily, it's had its peaks and troughs. It's had its moments, but we can see that overall, the 200 period moving average has been slowly but surely grinding its way up. Every time prices come down to it, it has used it as an area of dynamic support, and we've talked about that in our sessions. Okay, it's used it there in that area, and so it has been in an uptrend, but not surprisingly, the the news over the last few weeks and months has been rather how would I put it? It's been quite volatile, you might say, in trading terms. With his Elon coming out commenting on, him saying he's going to take the company private, and then him saying that actually his board he'd had a conversation with his board, and they have perhaps convinced him that isn't the way to go forward. So that kind of, not surprising, that sort of toing and froing, backing and forthing, that has an impact on markets, because markets are made up of humans, all right? Humans hate uncertainty, all right? And when he's saying, I'm going to do one thing, and then a couple of weeks later, I'm going to do another thing, that has an impact. That makes people, investors and traders, okay, that makes them worried about what they see. So they invariably, that has an impact upon what they look to trade and how they look to operate. So, at that moment, there we have. We've just done some quick bit of analysis on Tesla. It has been an uptrend, but realistically, okay, this year it's actually mostly just been going sideways, hasn't it? Definitely, it's that kind of 300 level there, I'd be saying, is significant significant zone there, okay, and any kind of breaks beneath that, okay, and then I'd be looking at it to go back and retest that 200 period moving average, which has for the most part clearly provided sort of very nice dynamic support. So it's that's one that is on our watch list, because we can see that every time Elon Musk tweets or he puts out a commentary, then it has an impact upon that particular market. So one of the other things they're saying is that I've added quite a few of these in here. We're looking at here's China. Okay, this is the China 50. Okay, so for those of you who occasionally join me on the Tuesday morning real-time daily trading ideas session, that's what I do every Tuesday morning at 10 o'clock London time. Talked a little bit about the impact of China, not surprisingly, in that and that the sort of the fears that have been had about the Chinese economy, and B, the commentary that we have seen, about tariffs and trade war between the US and China. And we can see this is the weekly chart. You can see that the price has just been, for this year, after having been. Here we go. Having been in a really nice uptrend, okay, for a couple of years, I think it's fair to say that this year has been, the traffic has been quite different, hasn't it? We can see that it's actually just been going down. I think we draw this in a few weeks ago. It's been making, lower lows, lower highs, lower lows, lower highs. Okay, that's just giving us an indication that the trend was over, and actually it has just fallen away. And interestingly, and I touched upon this in the real-time daily trading sessions, was that once again that sort of weekly 200 period moving average has acted as dynamic support. Okay, every time it's got down there, it's bounced. And now, what I see is, well, remember we're talking about dynamic resistance, dynamic support, and we've got dynamic support there from the weekly 200. I'll be interested to see if the 20 period moving average, if price gets up to it, if that acts as dynamic resistance, that kind of block there between what's that, about 11,870 and 12,050, whether that acts as dynamic sort of resistance, and whether we find ourselves price just sort of almost getting squeezed here. Okay, and that could be that could be a fascinating sort of idea for us to watch and view over the next few weeks. Okay, that's because if that breaks down beneath that 200 period and closes beneath it and starts to move down, well, that's quite significant, because we won't have been beneath it properly probably for about 3.5, maybe nearly 4 years. Okay, that will be the sign that the trend is over. So as I said, that's the China, and what I've got here is also, hopefully you can see along the bottom here, is I've just slowly but surely just added added, the those instruments that we talked about in the slides. Have added them across here to the to my Forums of Trading profile. And what we'll do is week by week we'll go through some of the interesting ones. We'll start to show how the sort of the habits that we're looking to sort of try and establish and build in your trading, and how we can sort of bring that to the pie. Let's have a little look maybe at Bitcoin, or one of the kind of see if there's an interesting one there. So here we go. Here's Ethereum. Okay, let's finish off with a bit of Ethereum. As I said, it doesn't really matter what your chart is. Okay, we're just looking at, start off with the monthly chart, just draw in those significant levels of support and resistance, go down to the weekly chart, and then add more. Okay, start to draw in any sort of significant particular areas. We can see this is the weekly chart. As I said, as this kind of trader I am, you see, I really like the weekly charts. I think they're great charts to do your analysis and to trade off. There's some awesome super opportunities. You just need to demonstrate a little bit of patience. That's all, ladies and gentlemen. Just sometimes you have to wait for the trade to come to you, and that's a subject matter for one of our future sessions. But we can see, Ethereum here is, it was in on the daily chart. We'll see. I talked about this a little bit. We had a kind of a zone there between around about 360 to 400, 410. Okay, that had been sort of, was resistance. Here we go, resistance. It was resistance. Then it broke through it. Then it became support. We washed through it up, came back down to it, and it reversed here, and it gave us a very simple price action pattern here. Okay, a morning star formation. Price ran up, and then it hit the 20 period moving average, and that became dynamic resistance before price rolled over and fell away again. We had it acting as a descending triangle. If you're new to trading, don't worry, we're going to cover those in future sessions. And what we can see is actually, we've broken through that level. Okay, we've broken through that level, and also broken through the kind of 300 psychological number. Right, we're just here sort of dipping beneath it. So I think it's fair to say at this moment, Ethereum, okay, is in a downtrend. Yes, that downtrend has spiked, really sort of kind of fell low, and there's a possibility at the moment this might be a double bottom forming here. Don't worry, we'll cover more of that, but it's only possibility. We have yet to see if it'll actually do that. Okay, so we will just keep an eye on that. So there you go, ladies and gentlemen. That takes us up to our time. What I said, every week by week we'll do a few bits on the slides, giving you a little bit of educational bit, and then what I want to do is to sort of just switch across the chart and actually go through it and start to build and start to have an idea of looking at what we're trying to do. But as I said, it's a case of, it doesn't matter what chart you look at, it doesn't matter. All right, it doesn't matter. As we saw China, okay, sort of China index, or whether it is Ethereum, or whether whether it's gold or oil or whatever, or DAX. Okay, start the monthly chart. Okay, draw in your levels of support, resistance, draw in any significant trend lines, start to identify those particular areas and levels that are of interest to us. Okay, that you start to see stand out, because when price gets to those areas, well, then that's where we're going to learn to sort of execute our trade plans. Okay, that's what we're particularly looking to do. Anyway, I hope you found that useful, ladies and gentlemen. I hope that gives you something to sort of to take away, okay, and and give you some insight into what we can do. As I said, I appreciate you joining me on a bank holiday, and as I said, week by week, okay, every week we're just gonna get a little bit more educated, a little bit more involved, a little bit more engaged, and over weeks and months the session will build and grow, and I look forward to you joining me for that, ladies and gentlemen. So I wish you the best success in your own trading this week, and I look forward to seeing you next Monday, 4 o'clock, for the next session in Mastering the Forums of Trading. Thanks, guys.